Today, we're going to be talking about what I think is the number one thing people can be doing to make themselves profitable. We know that we need risk reward, but this is going to go far beyond that. And the tactical things that you can do to adjust your strategy to zero in on your strategies and skew reward in your favor. My name's Alex, and welcome to the Mind Your Growth YouTube channel. You may have originally found me on TikTok, where I trade live every day at 11 a.m. Eastern. If you're not following me on my Instagram or on the TikTok, I have hundreds of short form videos to help you become profitable faster and independently. Follow along if that live trading is for you. We are currently sitting at 21 total trades that we've taken on live. 17 of them have been profitable winners. Again, 11 a.m. Eastern, we'll see you there. Now, let's get into the video. If you're not new to trading, then you know that you need to have risk reward in your favor. Studies show that most traders will only win about 50% of the trades. Now, think about the math behind that. If you're only winning half of your trades, the only way to have a profitable system for your trades to be profitable in general is for your winners to be bigger than your losers. And this is what we talk about when we mean risk reward. So ideally having winners that are double the size, 3 times the size, 4 times the size, because if you're winning half of your trades, it's the only way to make up the difference as far as the math goes. So you'll see people talk about risk reward in terms of a ratio, 2 to 1, 3 to 1, 4 to 1. And what that means is the reward is, in the case of a 2 to 1, the reward is double the size of your risk. A 3 to 1 is triple the size of your risk. Your risk being your stop loss that you'll take on the trade, your reward being your take profit area. So only taking trades that have at least double the reward than the risk is that first component. We're not here to talk about why risk reward is important. I think it's kind of easy to see how the math needs to skew in your favor for that to work. So instead, you have to recognize that it's not enough to know where the markets are going to go. Many of you probably have experience with technical analysis if you're not new to trading, and that often will give you an understanding, especially in key moments, about where the market's going to go. Let me know if this sounds like you. This was totally me early on, where I would predict the market correctly, I'd get in, the trade would reverse on me, and then go in my direction. Happens oftentimes to beginners because they don't have, in my opinion, the 2 key components that you need to skew risk reward in your favor. These are 2 rules that I always have in every one of the scalps that I take. I trade the S&P 500. Short-term, quicker scalps are really what I focus on primarily. So the first one is you need that directional bias. If you don't have a strategy that can give you some understanding of where the market's going to go, you need that first. And that's what technical analysis is for. That's why I use supply and demand. But this will work for any strategy. If you use EMAs, if you use Fibonacci, if you use oscillators, you will often have a directional bias based on what is happening with those different strategies. But like I said, just because that strategy is letting you know of a bias or of a way that things are going to go, it's not enough to get into the trade. So that second key component is an A+ entry. And that may look different for you, but as you journal and as you continue to trade, you need to identify what the rules are for an A+ entry. So for me, the way this looks for me, I will have that directional bias based on a key level, based on a supplier demand zone. And then the A+ entry only comes for me based on price action and volume. And I have many rules around that and what price action is doing in the key moments. And we'll go into some examples in a few right here. But just to say, every trade needs to have that. If you don't have that A+ entry, risk reward probably won't work in your favor. You may catch a trade once or twice that ends up working for you, or several times, but eventually this is a long-term game that will catch up to you. You want your system to be profitable long-term. And this is exactly what's going to do that for you and skew risk reward into your favor. So let's get into some examples and jump to the charts. This was today. And we'll see that we have a key level down here of demand. We actually opened in the day, came down when we actually closed below this key demand zone, but then we're staying above this. I actually mentioned in the Discord that I was watching to the upside here. We have a really strong candle here. Let's get rid of this before we talk about it. We have a really strong candle. This is actually officially when I was watching to jump into this trade. Bullish candle. We see that nice long wick to the downside. That's a good indication of price action. The only thing that I didn't like here was that volume wasn't incredibly high, but we can set that aside for now. But the directional bias was that we wanted to go long because of this key demand in this area. We also bounced from here in the pre-market. You can see that as well. So we knew this area was a level that could be respected again. Looking long, most newer traders, when they see this, right, they'll have their indication to go long. You finally see price action going in your direction. They'll get in here at the close of that candle because it's bullish. You then need to have your stop loss below the low, of course, to officially invalidate this trade. And then I wanted to play this up to this key level of supply. Now, when you're playing with this, when you're playing with risk and reward, this is a really good tool. I use TradingView. You can find this tool. I believe it's over here on the left here, long or short position. And as you're doing it, it'll automatically calculate that ratio for you. So in this case, we have below a 1-to-1 risk-reward ratio, right? So our risk is actually larger than our reward in the case of this trade. And again, going back to the math, if we only win 50% of these trades, especially when we're starting out, that's not enough to have a profitable system. And so if you have a scenario like this, you simply can't get in. That's why you have to wait for that second step for a key A+ entry. We have our directional bias. We need that entry though. Watch how this number will shift as we instead wait for an entry at VWAP or retest to get in. We're going to shift this down to VWAP, and we suddenly have nearly a 2-to-1 trade. Ideally, another retest of this zone would have made it even better, skewing that over to almost to a 3 reward to risk scenario. So you can see that this almost triples when you wait for that A+ entry. A lot of times I get the question, well, won't you miss your move then if you don't end up getting in right at the close of the candle? And the answer, honestly, is sometimes you might. But the difference between sometimes missing those trades, instead of not having a high reward, low risk system, it's much more important to have reward and risk in your favor. It just won't math. It won't math right. You may occasionally catch a trade that will shoot up, like I said, in your direction. But the next time that it doesn't, again, look at the stop loss that's required for this. You need nearly a 75-cent stop loss as opposed to 33 cents. Cuts your risk, cuts your stop loss in half. So again, directional bias, then the A+ entry needs to come after that. Let's look at another example. So this trade happened last Friday, and let me show you why it would be important here to wait for that A+ entry. So the first sign of this reversing near or close to this demand zone was on this green candle. If you were to get in at the end of this green candle, we did push up a little bit, but we got the fake out, then pushing below that area, which usually people will put for an invalidation point. You can see that we did wick down on this candle here. We wicked below the stop loss. It would have stopped you out. That's another reason why this is important, because if you don't wait for that A+ entry, then you sometimes get this case where you'll get faked out and it'll just stop you out. And then you can see, as you can see here, this ripped in the direction that you wanted originally. As opposed to seeing that price action reacted to this, a reaction down, watching volume as this comes in, I would have seen volume come in here. You can look back at the 2-minute as well here. Beautiful 2-minute hammer with tons of volume. This is your key entry instead. Now, look at the risk reward instead as we shift it from this original candle of 1.7 down to the close of this candle. You now have a trade that is a nearly 6 reward to risk ratio winner here. That is the type of trade that I like to take, and the type of trade that will make anybody profitable if you only take those over time. We had our directional bias with the demand zone. You then wait for that retest, wait for that A+ entry, whatever that is in your system. Again, volume and price action told the story here. Could have even moved your stop loss down below that wick, and you still have almost a 3 RR, 3 reward to risk ratio in your favor. The difference is dramatic, and most people don't implement this because they're not patient. Patient traders are winning traders. Patient traders are profitable traders. I want this for you. Wait for that A+ entry after you have that bias. I guarantee you it'll help you out. If this was helpful at all for you, please like and subscribe. We've got many more videos coming your way, and we'll see you in the next video.